Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast, and not just from one accountant's perspective. I'm one of your hosts, AJ Wheeler. With me, as always, is Mark Pallardy.
Hey, everyone.
And we have a great episode this week. A couple articles we'll talk about. First one is working with a web design firm for tips for larger nonprofits on developing that shiny new website you're looking for. Are websites relevant anymore? We'll talk about it. And then our part 3 in our 4-part series of Everybody Database Sucks, part 3, we'll talk about the nuts and bolts of your donor database, whether you want to automate it, what systems you want to link it to, who's doing the data input. We'll talk more about all of that in our third of a 4-part series on Everybody Database Sucks. And our last article is Universities and Cities, Why We Must End the Nonprofit Path to Wealth Hoarding. Are universities and schools, public schools, kind of holding back economic growth? Are they kind of stifling, and have they become too big in their local communities? We'll talk more about that and kind of get some feedback on it. And then last, how to convince, we have a question of the week, how to convince the board or their board to set up an endowment fund. What's an endowment fund? How do you set it up? How do you track it? What are the pitfalls of it? And should this organization that's asking the question actually set up one? We'll talk all about that in detail. But Mark, take it away for our first article.
Yeah, our first article comes from Charity Navigator, and it's called Working with a Web Design Firm, Tips for Larger Nonprofits. So around here, we often give a lot of tips and tricks for smaller nonprofits, people just starting out. But I think it's helpful from time to time for us to focus on some tools for larger nonprofits as well. Who knows how many of our thousands of listeners are working in large nonprofits out there. So some tips that this author offers up for making web design firm choices. So first, you want to identify your goals. Always a good idea in whatever venture you're going for. But in your creating or hiring somebody to do web design, are you looking to achieve a full digital transformation? Or, are you just looking for some sort of technology assessment? Are you looking for an online fundraising strategy revamp, or maybe a new marketing approach? So figure out what your goals are so that when you're going in to the web designer, you can sort of be tailor focused on what you're actually looking to get out of this. Find a consultant that fits with your organization's culture. This is important because you're going to want somebody who believes in what you're doing, who can, connect with you on that level, and who really, can be an advocate for you. A lot of web designers, especially web designers in this space, have worked with a lot of larger companies. Some have worked with other, larger nonprofits, kind of look at some of their design that they've previously done and get an idea of whether what they're doing, as a culture fits in with what you're trying to do. I mean, frankly, looking at their website will help you determine what kind of website they can actually build, because, it's going to have all the bells and whistles in there. Maintain a steady stream of communication. Again, this is another one of those kind of no duh issues, but you shouldn't just be hiring a web design firm and then say, okay, well, we'll see you when it's done. There should be a constant back and forth to kind of get an idea of how it's going, what questions have arisen, and they should really understand what your nonprofit is doing, so that they can represent it in the way that you're looking for it to be represented. So those were just 3 tips, but I think they're all good ones. AJ, any commentary on this?
Well, I think this goes for any size nonprofit. When working with kind of a consultant or any kind of implementation service, I think this could be for implementing a new accounting system, implementing a new donor database. It could be any of this, right? Like, you don't want to just set it and forget it. But one thing that I think, and this was written towards larger nonprofits, but don't underestimate the cost of this stuff. You know what I mean? Like, so, and I'm not just talking about monetary costs, but opportunity costs that it's going to take to, involve the stakeholders that are going to be using this. So you want something that's going to be representative of your organization. And I think it's something that you should probably do iteratively over time. I'm a big proponent of building on what you got, but totally redesigning a website, probably, if what you had there was working for you in some way, and then tweaking the parts that weren't, probably is a good idea. Identifying those early as to what currently works on your website, what you would like to see different, and making sure. Websites are very old school. I think if you're just looking at, especially as a larger organization, as that being your only kind of outreach on the internet, I would say you really need to rethink that strategy. Websites are, essentially old school. You need a good website. Everybody's going to look it up. You should have a donate button there and all that. But I think other channels of marketing are vital. I see a lot of my clients, the Facebook giving, Amazon Smile donations, Network for Good. Locally, we have a give guide that gets out through our local kind of alternative paper. I mean, there's a lot of ways to bring in eyes on your organization other than just a good SEO search or having a great website. So I would say, don't lump too much into what a website can do for you, and make sure that, your message is the same across all platforms, I guess, would be my kind of 2 cents on it.
AJ and I are going to have a disagreement right here and now. I think websites are far more important than just something old school that you need to have for donations. I think it really depends on your organization. I worked at a museum where I was there when they did an entire revamp of the website, and it took years. I mean, it took 2.5 years to get the final thing up and running. And there were many iterations, and it was very expensive. But depending on what your organization does, I think is the caveat I'm going to throw in Andrew's path, because there is quite a bit of work that you can be doing through the website. For this museum, for example, they had a lot of articles, they had a lot of links for people. This became a teaching tool and resource for schools. There were so many different aspects of the web that weren't working with the older platform that they were able to modernize and bring up, and they had to start from scratch because a lot of the technology the old website was built on was just outdated, and technology moves fast. I think if you are a large organization that needs to disseminate information, or your nonprofit goal is actually, has that aspect to it, right? If you're just using your website as a fundraising platform, I 100% agree with AJ that this is, make sure you have all your platforms covered and don't spend too much money on the website because it's just a landing page for the donate button, right? But if you actually are there to, present yourself and give good information and keep people engaged, I think a robust website is still kind of the natural way that people look at things. We're not in a post-website world, but we could have an entire conversation about that. And God help us if we all move nonprofits to TikTok, right?
Donate money. Woo, woo. No, I'm just that was my free TikTok for anybody who wants to clip it and use it for your nonprofit. But all right, I think we beat the website to death. Let's move on to our next article. This one is our part 3 of why everybody's database sucks, from Devin Ironside and Philanthropy Today. This part is really interesting, I think. So he really gets into process and procedures and kind of like what you need your database from a core level running. So essentially, you need to understand what your database is going to do and also how you do it. And so I think common mistakes and hasty fixes is one of the first thing he mentions here. Garbage in, garbage out, as they say. If you invested in having and maintaining a database, don't let it be garbage. Be thoughtful about what's in there. And so he kind of breaks it down into a couple of guidelines at first, kind of like his core tenets, if you might say. Have a field for every piece of data you put into your data. Don't just shove things where there isn't space. So, for example, emails, phone numbers, and Twitter handlers should not share a common field. They should be their own. I think that's, like kind of database 101. Split data where appropriate into divisible parts. Don't cram multiple phone numbers or emails into one field. God forbid you ever have to put this into Excel and split that stuff out. It can be a mess, as somebody that works with big data all the time, big data. Or data dumps, it can be a pain to sort all that stuff and get it into separate fields if you have everything crammed together. And then, don't do everything you can to prevent duplicates or other issues. I think this is a really good wrap-up point on this part is like, have multiple fields and don't try to cram everything into one place, but Also, don't have duplicate things in there and just fields for just, for the sake of having fields. So the next part he moves on to is hard and soft credits matter and should be simple. And I was kind of scratching my head when I read this part of the article, like, what the heck is he talking about? So if you have one donor writing a check to you every year, it doesn't matter. That person can be in their own field, and you probably don't need additional fields to understand who that money's coming from. Take that same donor that writes a check every month, though, and then he has, a construction business, and he donates from the construction business. And he's also on the board of a local foundation, and he gives money that way too. You really want your donor database to identify the donors. And so you need to recognize that these separately recorded in the database as like a business gift, a foundation gift, and an individual gift are linked to the same person. So you can thank that person and retain that relationship, because you're getting three different funding sources. And essentially, the IRS cares about the hard credit. Who's writing the check? Is it the business? Is it the foundation? Is it the person? So you need to have that information available to be able to, render them the receipt for their donation. But what the nonprofit cares about is the person that underlies each one of those donations is one singular person that's giving from his business, giving from his personal, and giving from his foundation. And you need to be able to tie all three of those together and know who that is at a glance. So being able to suss that out is really good. Really glad he added this one. Grant management matters too, but they shouldn't try to be crammed into a donor database. A donor database should be there for donors. Grants are a separate issue and have separate kind of, processes and acknowledgments, reports, requirements on a grant. And you shouldn't try to cram the grant requirements into the donor database, because they're going to have different fields. They're going to have different tracking mechanisms. And I'm a firm proponent that grant management should happen outside of a donor database. Some people may disagree. If you have a robust system and you have a separate database for grant management, great, but it's still outside of your donor database, I think, or your donor tracking. They have separate tracking mechanisms. Make sure that you're tracking them separately. I can't stress this enough. And then the final part of the article is, I think, where the rubber really hits the road, and I really identified this. You don't need every shiny object. Just because you want to integrate systems doesn't mean you have to. And often it's a good idea if you don't. So he has some questions to ask yourself. Why do you want to share? Why do you want the systems to share data? What data specifically do you want to share with the other system? What direction do you want it to go? Do you want the accounting system to inform the donor database to inform the accounting system? Sounds like a recipe for disaster, if you ask me, if you're trying to track each individual donation in the accounting system versus bringing it in chunk and having the donor database log what each individual person makes up that deposit. And then, is the integration scalable? If you get 100 more donors, are you going to be able to log each one of them from a data dump from the database into the accounting system? We talked previously about timing differences from a development department perspective versus an accounting perspective of when you recognize revenue. Is that sustainable if you're linking your accounting system to your donor database? I don't think so, but it can, I've seen it work, but it's going to take some finagling. And then what happens when it breaks? I think, Mark probably too has been in a situation where you have something set up and running and it breaks. And then what do? Your old process, and usually it lunks along for a couple of months and you realize it's broken. What do you do then? Who fixes it? So those are really big questions, because essentially what he says is, if you're not careful, you'll create a Jenga tower of complexity just waiting for the weakest link to fall. And when it falls, a lot of pieces fall with it. So the other part of this that I really love, this author's getting me right in the feels here. Automation, another solution you may not need. Everybody says automate stuff, but when you automate it, you need to, is it good to automate? Sometimes, but it's another hand wavy word that people use when they want to make things better, but don't want to put the work in to think through the process. I think really understanding what that process is before you automate it and how the automation is going to do it is vital. The same way integrating your donor database with the accounting system, if you try to automate this stuff, you're not checking it and you set it and forget it like an air fryer, you're in a recipe for a fire, and in the accounting system, not in the air fryer, but I think really taking a hard look at whether or not you want to automate things and how to do it. So, and again, so what's the takeaway here? I think it's like when creating a task or process, start in analog, which I think is good for any process like this. Really understand the nuts and bolts of how this is going to work, sketch it out on pencil and paper, do a walkthrough of the process and really understand it. So I think, we can all use that advice when trying to implement a system or upgrade one. But Mark, what did you think of the article?
Oh, crap. I left my air fryer on. Just kidding. Anyway, this has been definitely my favorite of the three of this 4-part series. We'll see what next week holds. But, and AJ touched very well on the main points here. And the author themselves is talking primarily about fundraising databases. But of course, as an accountant, as I'm going through this, the databases and the management for accounting departments is very similar, if not identical, to some of the tools and tricks you need to have. Anecdotally, I could tell you about situations where, I'm looking for a piece of information and then I'm asking somebody who was supposed to put the information in the system, well, why am I not finding this? Oh, I put it in the notes field, or, oh, I just added it to the end of their social security number. And it's like, that's not a searchable field and that's not helpful. And especially when they added things to the end of a social, it then made the 1099s impossible to create out of the system. So, having that delineation, having a database that is functional and the people at the end user level who are entering that data, understanding what the fields are and what should and shouldn't go in those fields is vital, regardless of what kind of database you're using. The other piece that really got me is the integrations piece, right? Because so often I've heard from so many clients, I just want one system that's going to do it all, right? I want my donor database, my accounting, I want admissions or whatever. I want one system that's going to do it all. So we only have to maintain one system. Well, there's a reason that sometimes you have different pieces of software with specialties to do different things. And oftentimes pieces of software don't communicate well with each other. I'm going to give you one of my favorite and most frustrating examples, and that would be from our good friends at Intuit, right? They create a product called QuickBooks, but yet the normal QuickBooks and QuickBooks Payroll are terribly integrated. You cannot convert from QuickBooks Desktop Payroll to QuickBooks Online Payroll. Same company. You would think that their integrations would work seamlessly, but I've spent countless hours fixing this for clients. And so having integrations, and then QuickBooks just keeps rolling out new products that they want you to add on to their core product that they don't necessarily work well together, or they don't vet them to make sure that all the bugs are out of it. And so you have these integrations that just break one part of the system, and then you're playing whack-a-mole trying to fix things and you're breaking other things. So having integrations can work in specific instances, but like AJ was saying with the donor database, you just want the top level information to be able to come over into your accounting system. You don't want to be tracking every single individual donor's donation. That just creates too much noise in an accounting system, and vice versa. That you don't want to be integrating where it's going to screw up your donor database. And having these systems working together seamlessly sometimes isn't a possibility. So know what the limits are and know how you can work with those limits together. So overall, I think this was a really solid article, and there's a lot here. And we're going to link, of course, the article at the bottom of the YouTube. So we welcome you to read this. But I think there's a lot of good pieces of information here. The other thing that they didn't mention that I do want to bring up, though, is be careful when you're duplicating data, right? Because I have seen a habit of different places where, oh, well, I want this data in an Excel format. Oh, I want this data in my expense program. I want this data in my QuickBooks program. And then you're duplicating data, right? And then you're constantly having to chase creating Excel documents to match your QuickBooks documents, to match your bill paying program. And if you're doing triple the work, and if you don't keep up on it, all of a sudden, well, I go to the bill paying program to get my information. Oh, I look at the Excel sheet to get my information. Then everybody's not on the same page. It's better to have one source of the information where you can all refer to, so that it's only needing to be updated once. Sure, you can use these other programs, but make sure that everybody knows what the main source of information is, and that's the place, that's the go-to to get the real answers.
Yeah, I was equally impressed with the article, and I think the real takeaway, and I think like the author states this, but I think it's kind of a broader takeaway is that, like, when confronted with problems involving whatever system you're using, it's often easy to confuse the problem with the system, as opposed to maybe the us in the system, right? How you're using it, how the data is going in there. In other words, how are we doing something that is really causing the issue? And the system just makes it obvious to that, right? So I think really diagnosing what the problem is and what your end use of this is, and understanding that to a T, is much more, like, I guess, the value behind that is much better than just switching on a new signing system to try and fix a problem that's already there, because lo and behold, that problem will pop back up if you're doing it wrong. It doesn't matter what system you're using. Anyway, Mark, you got our next article for us?
You bet. The last article for the day is called "Under Universities and Cities: Why We Must End the Nonprofit Path to Wealth Hoarding." This is an interesting article that talks about how universities, and this author kind of, I don't know if he coined the term, but he uses the terms city, because he basically talks about how cities and different locales grow up around a university. And because the university is a nonprofit entity in most cases, they get tax-exempt status and are sucking off of the coffers of the city, because any city wants a prestigious university there to draw in and attract businesses, draw in and attract people. But what happens is that this rise of towns and cities, according to the author, that are hosting universities, then become a basically small government of their own. They have their own security systems. Campus expansion can happen, which then takes away some land from the area. All these things, they start to affect the normal working of the economy around them, especially when those organizations are nonprofits. So, the author talks about how the history of this, we have different universities that started out as nonprofits and have just grown and grown and grown and become ultra wealthy. One of which, for example, is Harvard. It's structured as a nonprofit. I think I got that right. But what it's doing is it's not necessarily giving back to the community in a way that's going to help the people who are living in cities near there and aren't, participating actively in the university themselves. So their tax revenue base in the city is less because Harvard isn't paying any property taxes for anything that is educationally related. This puts the burden on others in the community to do road upkeep or, trash collection, all the other things that city coffers can help pay for to reduce prices and costs for individuals, really falls, to the rest of the people in that community who aren't part of this nonprofit university. So there are some policy solutions that are kind of being rolled out, like payment in lieu of taxes, where, for example, in Boston, the city currently asks university if they would please give 25% of what they would pay in property taxes if they were for profit, just so that they can recoup some of this money and not create an undue burden. There's also a clause in the California Constitution, since the University of California system is, huge. It's the third largest employer in the state. And they actually have a clause in the California Constitution to usurp municipal authority. So if they see something going on in their cities that they want to change, they can basically overrule the state. And this author suggests that maybe that's not the wisest decision, because it gives too much power to an already powerful organization. So it's quite detailed. I think it's a good article. I don't know that I entirely agree with some of the conclusions, but I would like your take, AJ, what you thought here.
And I'm not there's a very specific kind of niche in nonprofits that deals with schools, universities, and such. I audited a few small ones, and I can tell you that the rules are quite different, and the playing field is very different from like a traditional nonprofit. I would say that I think it's a case that schools have grown too big to fail almost. They've been given a lot of leeway. For instance, think about unrelated business income. A university studies everything. So if you're working with like a pharmaceutical company and developing new drugs, and you're getting this tax-free money and you're getting subsidies and you get to do it free of cost, and you're partnering with a pharmaceutical company, is that really related to education? Like education is everything. So there's no unrelated business income. You can sell merch, you can, like have all these different kind of things that supports a university, but federal and local taxes never see a cut of that, and essentially they're operating like a large business, and it's a concentrated, like, overall kind of monopoly on this nonprofit sector. So I would say that maybe because they are such a niche and they have their own rules, that maybe refining some of those rules so that like municipalities and federal government can claw back some of the subsidies that they've given or allowed schools to have. I would say this isn't unique to a school, though. You have the same kind of thing happen with with municipalities in their own, but those government entities are like controlled under a different set of rules by GASB, and have different rules to follow. Churches would be another one, like where they have special rules around tax exemption for like pastor pay and such. So but then the flip side of that is pastors don't get Social Security because they haven't paid into that to that kind of social net or social safety net. So I think it's kind of too big to fail almost at this point. And I think, like legislation is probably the only way to claw this stuff back. But you see the same thing happen in a for-profit where, like Amazon, for instance, they want Amazon warehouses to be in cities because they employ so many people, and cities bend over backwards to give them tax breaks and free land and development deals to bring in jobs. But at least they're getting some kind of clawing back some kind of money from income tax or sales tax from those people working in those areas. A university doesn't see that much clawback on those kind of deals. But I think it's analogous to kind of the for-profit, behemoths coming in and making a Google data center or a Facebook data center and, a small remote town, and how that town bends over backwards to be able to accommodate them. Same thing's true with universities, and the administrative bloat in a university is huge, and that's probably where a lot of that money goes, for education, and why it's rose so much over the last 20 years. So I'm by no means an expert in this field, but I would, welcome anybody that is to comment on it and maybe give their opinion on how this could change.
Yeah, and I think you bring up some great points, AJ. And I think a lot of this is a legacy problem, right? When governments are making new deals now with Amazon and Google, they have to answer for that currently. And I think a lot of these factors are taken into account. But if you look at University of California or Harvard or some old churches who are not paying property tax on the land that they sit on, that's a huge part. Property tax is a huge part of tax base for a lot of organizations. And this article, I just saw it again, talks about Harvard's endowment, which is $53 billion. That's tax exempt. So any money that's spent, there or received there, is tax exempt. And, it really does, it helps to benefit society in some ways, but does it do that much more than for-profit organizations that have a wage base and that are actually contributing to, to state and municipalities. So I think that wraps us up on that article. I think, AJ, our topic today, you've got it. So give it to us.
Yeah, I had a question come in: how to convince my board to set up an endowment fund. And the first thing they say here is, please help me understand endowment funds. Essentially, quick little rundown. This person runs a little 5-year-old museum, and they're pretty much in a good financial position. They have some good money sitting in the bank. She states, or he or she states, that they only have one bank account, and they'd really like to see at least 4: a payroll account, savings, emergency fund, a general checking, and an endowment fund. And so essentially what they're saying is, from what they understand, they can invest in an endowment fund, a fraction of what they have today. And the point is to grow that fund and use the yearly interest as cash flow or reserves. And essentially, they're wanting to know the different types of funds, or the ethics behind this, or how it's different from a stock market investment, or if it is different from a stock market investment. But their overall understanding is that it's a financial seed for the future of the organization, and then a potential path to their own philanthropic activity down the road. So here's the real meat of the question: how would you sell this to a resistant group, and need to understand the reason for setting up an endowment fund to push it forward? And then what do they need to understand or not understand about endowment funds or nonprofit accounting? And do they need an investment advisor to manage it? And how much the cost is behind that? So big question, a lot to break down there. I definitely have some opinions and kind of take on this, but I'll let Mark jump in first here and kind of give his thoughts on this.
Yeah, I mean, I think for the author, and they're asking an honest question, but I think they need to understand really what an endowment fund is. I think endowing your own surplus revenue, first off, yes, separate bank accounts for separate activities is always a good idea. It can help prevent potential fraud. It can help you with tracking. And if you have a lot of restricted money that you want to track separately, some people have different bank accounts for every single restricted program they have, just to keep track of that. That may or may not be a good idea, but having different accounts is always a good idea. An endowment fund, at least some of the experience I've had with it, as you correctly point out, you usually have a principal that remains untouched, and then the interest that grows can be spent. And it's often there's an endowment agreement where you can talk about what percentage of the funds can be used, and you look at what the earnings rate is at that endowment fund. It is usually invested in the stock market or in some other vehicle so that the money grows and you can take the interest off of there. A lot of endowments are endowed for a specific purpose. They might be restricted to a specific project. They might be restricted to a position at an organization, right? We endow the chair of this committee, or we endow the executive director of this organization. And so that seed money, then the interest off of that goes to pay an executive director, for example, and then you're not having to worry every year in the budget how you're going to pay the executive director. You know that effectively you have restricted money coming from this endowment fund to cover part or whole of that salary. So it is not a bad idea. I think a lot of organizations grow to a place where they want endowed money, and it's not a bad idea to work toward that goal. But I think using your own funds to create an endowment almost self-restricts that money, which is something that the board can do as to what they want to designate something to go for. And you can create a reserve fund that isn't as restricted as an endowment. Now, that's my opinion. AJ might have more to say about it, so I'm going to turn it over to him.
I think the most important thing to get across for this question is that a board set up endowment is not a true endowment. It's what's known as a quasi-endowment. And a true endowment fund that falls under UMIFTA rules is a donor stipulated endowment fund, and has to be written in an endowment agreement that happens, that's given to the organization. So I think separating the two is a good idea. I think understanding that you don't want to, this is going to sound weird, but you don't want to set up an endowment fund for like $500 or even $5,000. You want it to be a substantial chunk of money that can grow. And the reason why I say that is because if it's a true endowment and you accept a donor's endowment and it's $500, you must track that money until it ends for eternity and it's separately, and it needs, and then it's another page in your financials. If you're audited or you're having financials produced on a yearly basis, it's another page of footnotes, and it's another thing the auditor needs to look at, and it can add to your cost of an audit. Anyway, that's a long-winded way of saying you're going to have this money, however small it is, tied up for eternity and tracked separately and report earnings on it. And if you use it below what and it's often a myth that you can't spend the principal of an endowment. You absolutely can. And it's written into the UMIFTA laws that you can spend down an endowment and use it entirely and it goes away. And that's not against the law. You have to try and show that the endowment is underwater and, claw it back, but at some point you can write it off. So to think that this is just protected money that will always be around forever is not the case in practice. The other thing to think about is a board designated or quasi endowment fund isn't really restricted money. It's still unrestricted and is listed in your unrestricted or without donor restriction now funds. So a board designated fund like this is no different than like a reserve fund. The other thing to think about is once these are in investment funds, so they're tied up in some kind of investment. Getting that money back out, especially if it's in like a black box endowment fund, is very difficult. You got to go through paperwork. So you need to think about and really returning this question back to this little 5-year-old museum that this person is running. The first thing I would do is set up a reserve fund, and I would think about an endowment fund later. And the reason being is a reserve fund is much easier to access and when times are lean, get into than it would be in an endowment fund, even a quasi endowment fund. So I would say think about that first. And I would say that, although having multiple bank accounts for the reason that they've listed in this question, an emergency fund, a general checking, an endowment fund, and a payroll account, be careful. Somebody's got to manage all those bank accounts and move money in between them to fund, like, say, payroll or whatever it may be. Really think that through and realize that, you're going to be managing more than one bank account in this situation, and who has access to those bank accounts and how they're funded is something that you need to consider. So there's a lot in this question. I would say that, like, this person might be putting the cart before the horse. Really, you want strong financial situation and there's a lot more to do, I think, before you reach a point where you make a quasi endowment fund or accept an endowment donation from an actual donation from a donor. So just my thoughts on it, but definitely having a separate investment account for an endowment is rule number one. You can't have this commingled with other funds.
All right. Thanks, AJ. I think with that, we wrap up another episode of the Profitless on Purpose podcast. We really appreciate you being with us today. As always, leave comments down below in the YouTube or send us a tweet at ProfitlessPod. Thanks for being with us. On behalf of AJ and myself, we'll see you next time.
Thanks, everybody.